everybody. Glad to have everyone here. As usual, we're kind of like the Dodgers in baseball. The crowd shows up a little late, fashionably late. We always have 20 something when we start at 2, and then we have 50 or so when we in 10 minutes or 5 minutes. So anyway, that's fine. Um, this is our Friday training for the FICA tip tax credit. And we've got Stan and Stefan both here. There'll be some Q&A. Stefan is also going to give us a short overview. I know there are probably some new people on here today. I had a couple of people tell me they had someone new coming on. So that's great. We're glad to have them. We do on Wednesday have a opportunity Zoom that we do more for, your perspective consultants, but that's up to if you guys talk to them after Wednesday and they want to be here Friday, we're fine with it. Just to tell you a little bit about legacy tax. Stefan has been in business a long time. Um, he has been filing for the FICA tip credit since 2003. It's been around since 1993. He's been filing since 2003. The reason that's significant, there are some Johnny come lately people jumping onto this because they figured out, hey, there's some money, here we can make, a quick buck. And all of a sudden they're gonna, flood the airwaves, so to speak, emails and calling and walking into places, but they're going to be coming into places telling them how great they are at doing this, and they've never done it. Uh, Stefan has been doing it 23 years, and you know, you, I would 100% be comfortable with telling anybody that we're with the number one tax credit guy in the country. Stefan's got 22 locations, Legacy Tax does, across the country, and they're the fourth largest tax reconciliation uh, firm in the country. So it's not just a little, you know, side business or anything else. This is big business with for Stefan. Um, I'm going to let you, Jeremy. You want to tell a little bit about Black Swan and introduce Stan as well, and
Yes, sir. Thank you very much. So, Legacy Tax and Resolution Services is the main company. They've been around 40 plus years. Um, Stefan is a tax attorney, and they've been doing, like Kurt said, they've been filing these doing these filings since 2003. And there are some other companies around that they've done them for with reps out in the field, and they didn't like the way that a lot of these companies treated their reps. They took a large amount of the commissions, so they started their own affiliate program. So we're direct with Legacy, and the affiliate side is called Black Swan. So your links and things will say Black Swan, but they can all convert to Legacy websites. And Stan and Stefan have put this program together, and it's a program of consultants by consultants for consultants. So they're open to listening to any ideas that we might have out in the field. It's not a one-stop shop, and the commission wise, may I say, Kurt, our commissions are substantial. They're 2 to 3 times higher than any other company that may be out there doing it. They're few and far between, and like Kurt said, they're fly-by-nights. And it's actually a better commission percentage-wise than ERC. So thank
yeah,
you very much.
it
Thank you.
pays 2 to 3 times what ERC does.
Yeah. So
So
Stefan and Stan, thank you very much for this program.
yeah, it's awesome opportunity for all of us. Stefan, are you able to talk now, or you
Yeah,
still
I
have?
should be able
Oh,
to.
you're perfect. There you go.
Yeah,
I,
yeah.
I just never did see you show
It
back
was
up.
just
So
weird when I came in. I don't know what was going on.
yeah,
That's why I had to
I
jump
had
off,
it
come
set
back
to mess
on.
you up, I think. But anyway, Stefan, we'll turn it over to you. Let you kind of give them a short overview, and then we'll
Yeah,
start
let
taking
me
questions. I do have a hard stop in an hour, so
Okay.
at
3 Central. So I just want to let everybody know that too. I've got another Zoom I've got to get on. So,
Okay, let me just bring up. All right, so
May I ask a quick question? If anybody's here for the very first time,
oh
or
yeah.
maybe their second time, just raise your hand while Stefan's getting ready.
yeah, my computer's being really weird. Can you guys see my screen?
It says that you're going to share, but it's just a black screen right
Yeah,
now.
because it keeps going black on me. So
Do you want me to share mine and you can
let's
That's a
let
better idea, Kurt. Show yours
me,
and Stefan will kind of narrate.
tell me where to scroll to?
let me see if I
Just
can.
1 second here.
And
Welcome to
Jeremy, you got 3 new people here. Oh, sorry. Go ahead.
at least 3, yeah. So and some of them may not be able to raise a hand. So fantastic. Welcome.
Sorry, 1 second here.
Close Pro.
All right. Sorry, it's taking me so long. It made me
No,
re-log in real quick.
it kicked me. Yeah, so I don't know what's going on because it kicked me off too.
Oh, it did?
Yeah, let me try to see if I can share again.
Okay.
Now we're cooking with gas. We can see it.
You can see this. You can see the landing page.
Yeah, it looks good.
Okay, cool.
All
All
right.
right.
Well, then you don't need mine.
All right. So for just so what we're talking about here is the FICA tips tax credits under IRS Code Section 45B. It's estimated that $38 billion is the typical taxable income from tips. Most of the surveys will tell you that 80 to 90% of small businesses miss this. In particular, mostly the food and beverage industries. The beauty and personal care they're new to it for this year. The food and beverage this has been around for them since 1993. It's nothing new. Why everybody's jumping on this? It's because it's the new shiny penny. We've been doing this for quite a while, not as a large a scale, but we've been doing this for quite some time, as well as other tax credit programs. The median refund for the food and beverage industry is $101,000. It's less for the beauty and personal care just because we don't have the statistical information. Since this is brand new, this is their first year. It's estimated anywhere up to $11 billion goes unclaimed every year. This is a study done by the Federal Reserve Bank of Chicago. Anywhere from up to $11 billion in credits go unclaimed every year. And unfortunately, this is a big part of that. There's a high percentage of people of businesses in the food and beverage industry don't even know anything about this. And I have said this from webinar number 1. Don't take my word for it. As you start to talk to clients, see what they tell you. See if most of them go, I've never even heard of that. So, yeah, for the food and beverage industry, we can go 3 years back. And I'll wait till Stan gives me the okay to drop a bomb. But there's a couple of court cases. Uh, Wang for one, which is a 2025 court case, and there's a court case from 2024. So can I drop this bomb, Stan? He's muted. All right, so
Go ahead. Everybody's on their edge of their seat. Go ahead. It's a
all right.
bomb. Go ahead.
All right. So what this does, based on this court case, anything that was a deadline that was expiring anywhere between January 20th of 2020 and July 10th of 2023 are basically postponed. So during that period of time, a few things. 2021 return expired during that period of time. So for some people that meet the right set of circumstances, that would also bring the 2021 year in. So for self-employed tax credit, ERTC, FICA tips. So anything during that period of time, that would open those years up, that year up for that as well. Now, IRS is probably going to appeal, but the Kwan case is based on the Abdo case, so they may choose not to appeal at all. So the reason I say that is some of those older returns, if we file 21, they're likely to sit on them until they get the word that they're not going to appeal. So it's the scholars are mostly, going both ways, whether the IRS will appeal or not. So, but anyway, just let you know that 21 is something we should probably file. The IRS will probably deny it. And then we'll file an 843 to preserve our claim, and then we'll have to sit on it. Because if we don't do that, then we just plain miss out.
Yeah.
If they're not successful, which I can't imagine they would be, because again, it's based on a court case that was successful. So there's two court cases. One is Kwan versus the United States, and the other one is Abdo versus Commissioner. So that was lost. So I can't imagine that they're even going to try to push it for appeal. But that's
Stefan, can I ask
Go
a
ahead.
question
Sure.
about this? So I heard you mention ERTC. I don't know if everybody's paying attention, but that means people that did not file ERC would be eligible now to do that.
That's what I'm telling you.
Man, is that a
That is
big
what
deal?
I'm telling you.
I mean, I don't know how many people on here were doing ERC, but a lot of us have, contacts, and we all had some people that said, I'm just not going to do this. I don't think, I don't feel good or whatever. A lot of their opinions have changed. I've had people tell me, man, I'm sorry I didn't file for that.
Yeah. That's
So
those
it's
ones to head up is those ones that said, yeah, I missed the boat on that one.
yeah, yeah. Well, the boat just came docked one more time, right?
Yeah, because that clearly expired during that period of time because that whole cutoff deadline is now, like I said, I mean, the likelihood is those cases, the IRS will sit on them until there was a decision
Yeah,
reached one way or the other, whether they're going to appeal it or not going to appeal it until that word gets out, hey, we're not going to appeal this.
yeah.
They're
Well,
going to sit
that's
on those cases. But
yeah.
again, it's one of those, if you don't file, you don't get. You got to be in there. You got to have your case in there. If they deny it, file the 843 to protect your claim, and then, expect a wait. But
How
it
soon will
gives,
you have the particulars on the ERC program and all that? If we want to get started on that, is that like
well,
for
we were doing it before, so it's really just firing it back up.
well, I guess what I'm asking about is the commissions and all that stuff, because none of us know what you guys were doing at the time. So,
That's a really good question. When Stan and I need to talk about that.
okay, great. Just let
And
us
I
know.
and I thought I might have a restful weekend. No, that's not gonna happen. Yeah, that's all right. Go ahead. Let's
Sit
keep
by the
going.
pool and have you a beer while you're talking about the
Yeah,
deal.
boy. Okay, let's keep going.
All right, so where did I leave off on? So FICA tips. So for the food and beverage industry, we can go 3 years back. So the current year and well, 4 years back, 4 years back plus the current year for the 4 years with the right set of circumstance, because it really kind of depends on when they filed 21, whether we can get it still in there. But so potentially 4 years back plus the current year. For the beauty and personal care, 1 year. That's it. That court case is not going to help that because that came into law this year. So they start with 1/1 of 2021. So let me go down here a little bit and show you what is considered the food and beverage industry, because When Congress came up with this, they were not very specific on what they considered to be food and beverage. They just said for the delivery of food and beverages. That's it. That was their definition. For the beauty and personal care, they were more specific on what they consider the beauty and personal care industry. But here's what it is. So food service restaurants, bars and nightclubs, hotels and resorts, catering companies, coffee shops and cafes, other qualifying businesses like cruise ships and casino restaurants, food and beverage delivery services. Now, specifically, food and beverage delivery services is not going to be the Grubhub because those are typically independent contractors. So this whole program revolves around employees. Because keep in mind what this was all created for. It created to encourage employees to report their tips. Because back in 93, it was estimated that only 15% of all tips ever got reported. That number is considerably higher now. One, because of this program, and two, because of POS systems. Most things run through a credit card anymore and not just paid in cash. But that's what this was created for. Now, for the beauty and personal care industry, because they were more restrictive on what they considered the beauty and personal care industry. So these is the definition of the beauty and personal care: hair salons and barbershops, nail salons, spas, salons, wellness centers, fitness services, aesthetics and skincare studios, and makeup artists. That's their definition of what's considered the beauty and personal care industry. Now, some of these, it's particularly like the nail salons, tend to be more independent contractors. So they must be employees. And of course, the payroll taxes have to have been paid by the business. So some of the requirements that when they created the beauty and personal care industry, they did one thing a little bit different than the food and beverage industry. The food and beverage industry, all we have to do is exceed $5.15 an hour before we get the full credit. For the beauty and personal care, they set it at $7.25. So we have to exceed 7.25 before we get the full credit. On this landing page that all of you would have access to is a calculator. And that calculator, you can plug in a few things. So you plug in the number of employees, you plug in their average wage, and I talk about the wages they get paid before the tips. And then the weekly tips and the number of hours. Now the hours are not important unless they're below 515. So we can plug some numbers in here. So let's say 10 employees. I'm going to leave the 213 here for a minute. So, and let's go with 450 per week in tips. You can see it's 9166. And if I raise this to 515, you're going to see that credit go up. Reason that is because now we're at 515 and we get the full credit. Before, at 213, which by the way is the minimum you can pay, we have to give some of that credit back to get them to the 515.
Yep.
So the beauty and personal care works really the same thing, except this right here is 725 an hour. Before we get the full credit, we have to be paying 725 an hour. So once we get to 515, like I said, the number of hours doesn't make any difference at all. So you notice it's still $12,531. I can take this down to 2 hours. Doesn't make any difference at all because we've hit 515 an hour. It doesn't make any difference how many hours they work. It only makes a difference if we're below 515 because we have to give some of the credit back. So now we got to do the math on the hours times the number of hours to give some of the credit back. Here, they're at 515. We're already maxed out. We get the full credit. Doesn't make any difference how many hours they can be. Full-time, part-time, doesn't make any difference at all. So questions?
Raise your hand if you have a question, just go down to the React. It's a heart down at the bottom and click that and you'll see where you can raise your hand. Steve.
Hey fellas, can you hear me okay?
Yep.
One of the people that I have talked about recruiting did a look on online, and they were finding that the the refund is not a cash refund, it's not a check, it's just a tax credit that can be applied moving forward. Can you speak to that?
Yeah, unfortunately, there's some bad information out there. I mean, I see things talking about the 7.25 an hour. They're getting the beauty and personal care industry mixed up with the food and beverage industry. What they're trying to refer to and doing a bad example of it is explaining what the difference between a refundable credit is and a non-refundable credit. So here's an example of a non-refundable credit. So let me start out with a refundable credit. A refundable credit, whether a person has a tax liability on their personal return or not, they still get the full credit. That's a refundable credit. On a non-refundable credit, they only get money if there's a tax liability on their return. Let me put some numbers to it. So let's say in 1 year, I can get them $120,000. In that year, they had a tax liability, meaning they had a taxable income, and then they calculate the tax, and the tax was $100,000. How they paid it doesn't make any difference. Whether they made estimated payments, they did it with withholdings. Essentially, there's $100,000 in the system. So we have a $120,000 credit. We have a tax liability of $100,000. We can get $100,000 back. But let's take the reverse of that. Let's say we got a $120,000 credit, but in that year they had no tax liability. There's nothing we can get back. There's no money in the system. We would have to carry it forward into the next year. And then that year would have a new credit plus a carry forward credit. Does that make sense?
And Stefan, when you said we can get them 100 out of the 120, the other 20 is carried forward, right?
The other, so
Yeah.
we can
I
only
just
get
want to make
back.
sure
So think
everybody
about
understood that.
think of it this way. This is what I try to get reps to understand. If there's no money in the system, there's no money to go after. Okay. We can only go after what's in the system. That is a non-refundable credit. If in that situation they had no tax liability and it was a refundable credit, we could still get $100,000 back, even though they paid not a single dime on that tax return. There's not a lot of those credits around. This is a non-refundable credit, very much like R&D. Again, same thing, non-refundable credit. They don't have any money in the system, then they have to carry it forward.
So if they have if they are in arrears, this could help them out to carry forward, but they're going to have to pay you for the work up front out of pocket.
Yep.
But
So hence the reason why we get an 8821. And so I was talking to somebody today where it's like, why do you ask for so many things? Why? Because there's a reason why we ask for everything we do, including an 8821, because we don't want to run into that situation where we get a big fat credit for somebody, but they have a tax liability of, we get them a $200,000 credit, but they've got $100,000 back tax liability. Guess what's going to happen to $100,000 of that $200,000 credit? The IRS is going to suck it up. We're not getting paid on it. So we need to know that up front, saying, hey, we got you this credit. It is a benefit to you, but we're not going to get paid on $100,000 of that $200,000 because the IRS is going to take it. So you're going to have to come out of pocket. It's still valuable. You got your $100,000 paid off, but we need to get paid.
yeah,
So we need to know that up
the fee
front.
is going to be a whole lot less than the 100 that they owed. So they're coming out ahead on the deal, but it's
Yeah, it's still a benefit to them because
still
there's one
gonna,
gentleman I talked
yeah.
to, he had like a $20,000 liability. And I said, we're not going to get paid on this. So if you want us to do this, yes, it gets your $20,000 liability paid off, but you're going to have to come out of pocket. And he's like, yeah, it still makes sense to me.
Yeah. Okay, Michael.
Yeah, just a quick question. When we calculate that, I know previous, you were talking about, when you look at the total down there, is that the total? That's the total for the business owner. So we're sitting down with a business
Yeah,
owner.
we changed that. Initially, this was a gross. This is now net of our fees.
Okay.
Yeah.
Okay, there it is. Net of the
Yeah,
fee.
net of the fees. So this is now net of our fees. Now, the other thing the client has to be aware of, and I'll usually mention this during the interview, is we can't double dip. So if I get them a $12,531 credit, I have to reduce the payroll taxes that they claimed on the original return by that same 12,531. So I'm reducing a deduction that maybe it's a 25% benefit, and he's getting 100% credit. So it's still 75% to the good, but I do have to reduce the payroll taxes because you can't keep the same payroll deduction when you got the money back. So I'll let clients know that during the interview. But as far as trying to make a calculator do that, yeah, it would be so complicated.
So this takes off our fee.
This is after our fees.
Wow, that's awesome
That's
because
why
I
usually
didn't
just,
know we were doing that. That's
yeah.
great.
So this was something that was asked, I don't know, maybe a month or so ago that we would make some changes to this, and we did.
And
This
it's
is,
and it's for a single year.
it is a single year. Yes.
Yeah. That way, if they haven't filed their taxes, it can be an additional 3 years.
Yeah.
Four.
And potentially maybe 4.
Okay.
Depending on when they filed 21. If it still falls within that statute period of time, we potentially opened up the 4th year.
Awesome. Thank you
And
very
that-
much.
You're welcome.
And that time that it would fall in is if they had an extension and filed in July or October, right?
Right. So the time period would have to fall into because the court case is from January 20th of 2020 to July 10th of 23. Yeah, 23. The reason why you're seeing language out there now that extends the statute to July 10th of 26. Anything that fell within that period of time that expired in that time period would have until July 10th of 26 to file.
Okay.
So we didn't need to get some returns. Same thing for everything else. ERTC, self-employed tax credit, all of them have to be filed before July 10th, otherwise they expire.
So you got to jump on them right now.
Yep.
That's the thing
Yeah, so
message
you got
everybody
a
needs to
small
take.
window, just like there's another big thing that R&D. So anyone who filed R&Ds and then did the amortization of expenses, they also have until July 10th to file an election to take their expenses retroactively all up front, meaning instead of amortizing them over 5 years, they now get to take all of them up front. But they have until July 10th to do that as well. And the other thing that this brought up is anybody who got penalized in that period of time, their penalties are abatable.
Nice. Okay, Natalie.
So when you say average hourly wage, is that what the business is paying them plus what they're claiming on their tips? Or is that
No, so that is before. So typically like a restaurant will pay a certain dollar per hour. A lot of them are like 213, some of them higher.
Most of them.
Yeah, most of them are at 213 because that is the minimum they're allowed to pay. So most of them are paying 213. And then till we get to 515, we're going to lose some of the credit. So the program was set up in 2017 with a minimum wage of 515 an hour. So we have to give some of it back to get to 515.
Okay.
So that's why you see that I did that 213. You can see here when I plug in the 213, now the number of hours makes a difference. Whoops. What did I do wrong?
400 hours a week is a hard
400
week.
hours. Yeah, okay. I was going to say, what the heck happened there? Okay.
That's
so
a hard
notice,
week.
Yeah. So you notice that I'm at, 9167, and it's because I'm at 213. Now, if I raise this to 515, at that point, I get the entire credit. That's why that number went up.
Yep.
So anything between 213 and 515, I'm going to have to give some of the credit back. That's when the calculation of the number of hours makes it important. Once I
Yeah.
get to 515, the number of hours is irrelevant.
Yeah. Susan,
Yeah, I have a question for you. Roddy and I went out yesterday and we kept hearing from certain people that we prospected. They don't want to give their income, either personal or business. How do you overcome that?
The only way we can do this, somebody else was asking about this. Actually, somebody had told me that they were talking to another service, and that service asked for a lot less documentation. So I went through and basically wrote them an email and said, here's the reason why we asked for every one of the documents that we asked for. Because I can't calculate, for example, if they're an S corp, I can't calculate the amount of refund they're going to get without seeing their personal return. I have to, because they have to have a liability on their personal return before we can get anything for them in that year, or it's going to carry forward.
because
So
it's a pass through, right?
yeah, because it is. And so
Yeah.
I like an email I sent to this gentleman. So if you're working with a company and they didn't ask for your personal returns, I don't even know how they could have given you an estimate, because how would you even know what you're going to get back on every personal return unless they have a copy of that personal return? So if I were you, I would run, don't walk.
Susan, the other thing I would tell you too is if they're interested in getting this credit, they're going to have to give somebody their tax return.
Yeah, yeah, you're gonna have to give it to us eventually.
Yeah, and so we're gonna get their income and all that other
Right.
stuff. So it's just necessary. And I wouldn't make a big deal about it, but I would tell them, listen, if you want this money, which here's the potential of what we feel like we can get you based on the information you gave us, it's a significant amount. Now, do you want that and not tell a CPA that's going to file it for you how much you make? Or are you going to share the information with them? It's no different than their own CPA. They share all their information with them.
Yeah,
Stefan is,
so to me, if
yeah,
you're so hesitant to like, and here's what they're probably talking about, is on the survey, one of the things we asked for, it's not on the first, it's not the top anymore, it was.
yeah, that was a
But
good
we're
move.
asking them, what is your taxable income on your personal return? The reason I asked that is if you're telling me that you have no taxable income on your personal return, I can't get you a credit either. And if you have that situation for 4 or 5 years, guess what? It's all carrying forward. And so that's going to be the situation that we described down below, where it's a full credit carry forward. Nobody's getting paid. You're going to have to come out of pocket.
No,
You'd still benefit. Sure, if we get you $200,000, but it's all a carry forward, it's still a benefit to you. Think of it as a planning opportunity, but nobody's getting paid for it.
right,
So you're going to have to come out of pocket, or, talk to our hedge fund and get you credit, but nobody's getting paid.
yeah,
So I described that here, where we have the situation where it's a full refund, no money out of pocket. Partial refund, partial carry forward, there's gonna have to be some money out of pocket. Full credit carry forward, there's gonna have to be some money out of pocket. You're gonna have to talk to our hedge fund, because otherwise nobody's getting paid.
yeah,
That's why we asked the question on your tax return on taxable income. But if you're not willing to give that now, you don't want to waste time with that person, because they're not going to want to give you the tax returns. And we
yeah.
cannot do this without tax returns.
Stefan, if they have a carry forward, and they have to come out of pocket, which I'd never heard you mention this before, our hedge fund, they will finance that for them, give them their portion and pay you your portion out of the hedge fund.
Yeah, so the hedge fund would
Perfect.
wait for the money and
Yeah,
essentially finance them. And so they'd wait till the next year to get paid, or however, hopefully it's
yeah,
in the next year. So think of it as a planning opportunity. So if we create a $200,000 credit, that client can make quite a lot of income and not be taxed, because they've got a $200,000,
right,
essentially a credit against taxable income. That's a
yeah,
huge amount, depending on, think about it, divide that by, the effective tax rate, and you can have quite a lot of income and not be taxed.
yeah. Yeah, so and so the hedge fund, they don't give the client the full amount and then they
No.
have to pay you.
Yeah,
They
no,
split it up.
no hedge fund is ever going to
Perfect.
give the full amount.
Well, I'm talking about, I don't mean the full amount, but I'm talking about the payout is going to
Yeah.
go to you and to the client, not
Yes.
just to
Right.
one and then have
Yeah, they'll
yeah.
typically, yes, they'll typically
Perfect. Yeah,
fund like
perfect.
80%.
Okay.
Yes.
Hey, Rick, you're up.
Just to clarify, the April the 15th has passed, so that kind of got everybody on the 2022 loop out of the picture if they filed on time.
Most didn't.
This new little deal that just came up that may or may not actually come to fruition if the IRS appeals or not, does that bring 2022 back into play? I mean,
Well, 22, okay, so think of when 22, the statute of limitations. So what you're thinking of is, can we electronically file 22? No, we can't electronically file it anymore because the electronic filing statute for 22 expired, okay? Doesn't mean that the refund statute is expired. So it's always the year after. So if they filed on or before April 15th, yes, that would mean that 26 is expired because now if they extended, that brings 23, 22 back in. So if I filed, so let's say I filed an extension and I filed in August. I've got 3 years from that, the day before I filed to get that return to the IRS.
so back to my question. So 2022, for anybody that filed it on time, is no longer in play. We only got 23, 24, and 25, correct?
Correct. Correct. Yeah, because
Okay.
that would have expired April 15th of 26.
So
But
the
Well,
new
then take it back eight. So it was due. No, take it back. No. So 23 is due April 15th of 24. So to 27.
but I'm talking about 22. I don't know where you're getting 23 from.
Oh,
20.
you're right. You're right. You're 23.
you're not
Yeah,
listening,
yeah,
man.
you're right. Yeah.
Okay, so now 20.
Yeah.
So but
22
now
is due in 23. Yep.
so with this new little gizmo that may or may not come to fruition based on the IRS, it could bring 2022 back into play. Is that what we're to understand?
Correct. So if it
If they got an
expired,
extension, Rick,
yeah,
Rick is what he said. He said
yeah,
he said that a couple of times.
yeah.
If
So
Oh,
they
because we're
filed on
talking
the
about
15th of April, it's
2021 as
over.
well.
yeah, if they filed timely, but if they filed timely, no, because if they filed timely, this isn't going to help them because their statute would have expired in April of 26. I
So
mean,
how's it going to
the
help
new
people in
case law.
2021?
So if they filed after that, so 21, the statute runs out during the time period where all extensions, all statute period of time were extended. Postponed is really the right term.
Yep. Thank you, Rick. Noel.
I'm looping back to Susan's question. I lost my train of thought listening to the last commentary. It's coming to
Well,
me. It's coming to me. So,
you're talking about people not wanting to share their personal income and all that.
yes, and I've had that come up a couple times as well. It's easier if you know the person, if you've done ERC work with them. If you don't have a relationship, I had presented something, so I just want to make sure it's correct to present this, and then it can help others. One, I again always start with the calculator because if they say they don't want to provide any further information, I keep reminding them of what their return looks like. Okay, and fine, we can walk away from all of this if you don't want to provide the information because we go no further on this number unless this information is provided.
Right.
Very easy. Don't give in to their negativity. Stay positive. Believe me, when you stay positive and you keep encouraging them, this is your number, but you need to do this. Again, don't give in to the negativity of what they don't want to provide. However, gentlemen, the question I have is if they don't want to provide that directly to us because we're the consultant, not the expert, can we tell them within a range we need a number? And then when you're privately conversing with the consultant, they're going to need the exact information. Maybe they
Yeah.
feel a little more comfortable once they get to
Yeah.
the inside expert. So we can just say
Yeah,
within
exactly.
range, we need something to submit
Yeah,
this. Is that
so, I
okay?
mean,
All right.
yeah. So, all I really want to know, and the reason why that question exists, if they say I had no taxable income, we're all wasting our time.
Yeah.
At least on that year. So if literally you told me, and I have a situation just earlier today where we looked at the tax returns, there was no tax liability on any of the returns. There is no point in looking at any payroll reports at that point because there is no credit. And and one other thing, that business went out of business so the period
So
of
there's
time that we're
nothing to carry
looking at,
forward to.
and then went out of business. So it's not like the next year they're going to have some kind of a credit that we can carry forward and they'll get a benefit out of it. They're done.
Yeah.
So at that point, there's no point in looking at any payroll reports because there's no benefit for anybody here. Does that make
Makes sense.
sense? That's why that question exists.
Yeah.
Because if they're telling us there is no taxable income, there's probably not anything we can do to get a credit either. And we need to know that up front.
Jeremy.
I got a couple of messages. Some people were in noisy locations at the end, or maybe now. Stefan, can you just go over that ERC thing again with 2021?
All right, so 2021, so 21 expires in 22, and it goes, so during the period of time, because think of everything that expired. So that expires in 22. It's within the court date. So that one stretches it out to July of 26. Okay.
Okay, July 10th.
Yeah, July 10th. That's because it's the period of time. So January 20th of 2020, I'm sorry, 2020 to July 10th of 23. That's the postponement period. So we go 3 years from that. That's why it's July 10th of 2026. Anything in that period of time, push it out to July 10th of 26.
Okay,
So
thank you.
now 22, because it's outside of that period of time, we need to know when they filed.
Yep. So
Thank
we
you.
may be able to go back and get them 21s and not be able to get them 22s.
It's possible, yes.
Yeah. That makes sense. All right, Daniel.
I'm sorry if I'm beating a dead horse, but I just have one quick question on the last issue we were talking about. I'm just curious, why do we need the figure for their personal income tax? Wouldn't we want the corporate or the partnership or LLC, whatever it is? I mean, suppose there's multiple partners or the owner has multiple businesses. Well, why are we looking at the personal tax number?
Because most of the business are flow-through entities, which means the credits actually obtained on the personal return. For example, if the business is an S corp, the credit flows through the S corp out to the shareholders. That's why on the interview, I always ask them how many shareholders they have. Most of the time it's an S corp. So how many shareholders do you have? Well, it's just me and my wife. Okay, well then all we're talking about is you and your wife. We don't have to worry about any other shareholders. But the credit is actually obtained on the personal return. That's
Oh,
what
really?
we need.
Okay. So it would be distributed among all of the partners or shareholders.
Yeah. Now, in an LLC, they have the right to distribute income and tax benefits according to something other than the ownership percentage. So if the other shareholders or other partners sign off on it, it could go to just one partner. But I would have to have some kind of an agreement that from each one of the partners, they understand it's being allocated to a specific partner.
Susan.
Roddy has a question.
The question I had is when you apply for let's say we have a restaurant that we get for the tax credit, do you automatically see if they've automatically done the ERC program or not? For example, we have one that we're turning in. Should we mention the ERC or would that automatically be done when you go over their taxes?
Yeah, we should definitely ask them if did they take advantage of ERTC?
Okay, so that's what I was wondering.
Now based on this, we have another bite at the apple. Now, understand it's not going to be a typical, file and wait for it's going to take a while.
Right.
It's probably going to sit there. They're going to do nothing with it. But if you don't do it, you have no chance.
You're not going to get it. Yeah.
So you file two different things, the ERC separate from the tax credit.
Yeah. FICA tips and ERTC are two completely different programs.
Okay, but you will mention that to them if we turn them into you, or do we have to do that in advance, or will you do that?
No, we would pursue it as well as other programs. So the other programs that restaurants typically fall under are WOTC, the work opportunity tax credit's usually a good one for them as well.
Okay, thank you very
And
much.
as well as other programs that you should be having a conversation with, 125, those programs are they're
Right.
decent programs for the restaurant industry.
Yeah, so just to give you guys an example, George had a client on a call with Stefan yesterday, and they own a couple of restaurants, and he talked to him about the FICA tax credit. He talked to him about ERC because he had just heard about the ruling right before the call, and then they own one of their buildings. So now they're also talking about cost segregation. All George did was put him in contact with Stefan on FICA, and George is going to get paid on all those things. So that's what we're working with. When we talk about you talk about fees or anything else, there are going to be some companies that will charge less than we do. I mean, that's just going to be a fact of life.
Yeah.
And if we go down, there's going to be some companies that drop their price again or whatever they have to do. But when they do business with us on these credits, they're going to get the credit done by an expert that's been doing it for 23 years.
Right.
And he's also going to help them get any other available credits that they have coming their way, could have coming their way. And I promise the other places are not even going to talk about any of that other stuff. They aren't going to be set up to think about it, to even undertake it. So
Yeah.
that's what
Yeah.
we earn our 25%.
And I hate to beat up some of these. Some of them I've heard about are wow. I mean, there's a reason why I asked for every one of the documents that I asked for. There's a reason for every one of them. And the fact that some of them don't even ask for that, I'm like, wow, you need to run away from those people.
We had the same thing happen with ERC. We had companies that were, coming in and they would come up with a number that was, I mean, you knew it was low. It was too low, but they had no idea what they were doing. And
Yeah.
this is basically going to be the same thing. There's a lot of
Yeah.
them.
Yeah. So, I mean,
They're going to be guinea pigs at the early
what the
stages.
clients have to understand is, if they get audited and there's clawback, now the IRS is asking for that money back.
That's a bad day. Yep, that's a bad day at the office.
Or you're doing something stupid. Like I had a conversation with a gentleman earlier today, and he was asking me about, well, we've never filed the form 8027. Well, you've got enough employees, you have to file that. Do you understand that you're subject to penalties?
Yeah.
And if we don't address that, the reason why I ask you that question, even though, yeah, a high percentage of the business don't even know they have to file that, but you are required to file that. So what happens when we put that in front of an auditor and they do the compliance check and they go, these people should be filing an 8027 and they're not. So I'm going to make a referral for penalties.
That
Okay.
way they can hang on to some of that money that you're trying
Yeah,
to get,
so
right?
did you just set yourself up for an audit because I didn't address that? That's why we addressed the 8027. I know a lot of businesses don't file that report, but they're supposed to.
Yep.
So there's a reason why every one of those documents are requested. A lot of it is, let's make sure that you didn't already take this and we're not going to get egg all over our face.
Yeah. Stefan, somebody asked in the chat if you could show real quick what the commissions are on this program.
Sure.
And then another one asked if we can get a copy of the email that you sent explaining why you need what you asked for.
Yeah, I can do
That would
that.
be great for everybody to have, I think, as well. So maybe we have Stan send that out to everybody or
Yeah,
something.
I put that in a Word doc today.
Thanks a lot, Kurt. I thought I was gonna have a night. Never mind. I work 7 days. You know that. No, no big deal.
Yeah, we all do. Right? Okay. So yeah, I'll let you kind of show them what the commission deal is and
Yeah, let me bring that up. Come on. I think I need to boot my computer. It's being really
yeah.
slow.
While you're doing that, Yogi, you're gonna have if they didn't file for ERC, they can. And what Stefan is saying is that the IRS is not going to act fast on that, so it's going to take a while. But if they've filed and the IRS decides we're either not going to challenge it or they challenge it and they lose, that person's going to get paid. If they don't file, they're out they're out the door. They're not going to get anything anyway. So that's why he's recommending that they
Yeah,
go
I
ahead.
suggest, well, if you don't file, you're not going to get it. It's like
Right.
if you don't ask, you're not going to receive. Okay.
Yeah.
That's just the way it is. But expect that when we do file, until the word gets out, a lot of these are going to get responses where you're outside of statute, you don't qualify. We have to respond back saying, no, based on this court case, we do qualify. Then they're going to sit on it until they get, specific direction from supervisors saying, yeah, go ahead and process these
We have
cases.
to
But
process
it doesn't
yeah.
look like we're going to appeal this.
Yeah. James, where did
Sorry.
James go?
Hello. I'm on a forensic finances team and kind of new to all of this still. I know I did sign up for get access to whatever. I'm not even sure what all I signed up for exactly. But what I wanted to ask was, what is it? I guess like on your website, is there like a script or anything that I can go to and start practicing so I can start approaching companies or restaurants?
Dan, what do we have? I mean, what do we have in regards to scripts right now?
I know. I think we put a few things together, and I think Uncle Dan had some stuff put together also. Remember, he's got his little PowerPoint we've done.
Yeah.
Yeah.
Kurt, he showed that before. Really good. Uncle Dan does have a script, and he's got his hand up right now. So
Yeah.
could you unmute him, and we can ask him what he's got.
Yep.
And my last question is, what exactly is the RC strategy that you were talking about? I guess that's like an old tax strategy.
You talking about ERC?
Yes, the ERC. What exactly is that?
Yeah.
The ERC is the Employee Retention Tax Credit. It was
Okay,
designed
gotcha.
to reward businesses that continue to employ their employees during COVID. But
Okay,
it
gotcha.
expired. So if you didn't file before a certain date, then you were just out of luck. Well, because of this court case, the thought is that that opens the statute up until July 10th of 26. So
Gotcha.
businesses get another shot at ERTC, but they've got to file before July 6th.
Gotcha. All right, and then so on y'all's website, like, is there like everything that y'all are asking for? I know you just said you're probably going to send out an email like that. That's all on the website. I can always go and reference.
No,
Like, hey,
so we're not asking you to be responsible for gathering that information. So we do that all through our portal. So what we do is
Okay.
your job is to get the client signed up for an appointment. We do the interview. We determine essentially what I do on an interview is just make sure there's nothing that's going to are they doing pooling or is there something that's going to hurt us or reduce the outcome. So I make sure there's no things that are going to jump out and bite us. And then we do
Yeah.
a math calculation of what they potentially could get. And I'm asking them, do you want to move forward? Does this sound like something you want to do? Yes, I most definitely do. I get them set up with the portal. And what I also am doing is I also put the rep on the portal as well. So you can see what the client sees. So in the portal, we send them a request for all 8 steps.
Yep.
And then we ask them to, complete step 1, fill out the survey. We're going to get an engagement letter set up for you, and then we're going to bring all the other steps. We will soon here have a completely separate process where you, the client, and us will have access to, think of it as an interactive checklist. So they'll go through, they'll start checking off what they've uploaded. And then once they believe they've uploaded everything, they're going to hit submit. We're going to get that information. Now we go in there and look to see what they've uploaded. to determine what they have and haven't. And we go back in there and say, you uploaded this, but that's not what we were asking for. Can you, and give them guidance on what we need specifically from them.
Yeah,
But
and it's real important the rep stays in contact
it
and
is.
follows
So,
up. Stefan and his staff don't have time to chase the people. They just can give them the information. Here's what we still need, but
right.
you can, as the agent, the consultant, if you want to call it that,
Yeah.
you made the initial contact with them. You need to follow up with them. Tell them here's what you still need to get. Who can we talk? Which one of your employees can help me get this information?
Right.
If you're too busy, and then move forward from there.
Yes. So
Uncle
what we're going to
Dan.
have here real soon is you're going to, in your back office, as part of the affiliate team, the affiliate back office, you're going to be able to see clients, and you're going to see where they're at in relationship to the checklist of all the things we asked for.
Yeah.
They're going to be checking things off as they upload them. You're going to be able to see it. We're going to be able to see it, and they're going to be able to see it. So you'll be able to follow along. So if we ask for all these 8 things and they've uploaded 3, you can see it just like they can, that, hey, you're still 5 steps away from even moving forward, because these guys won't look at anything until all 8 steps are complete, because it's very inefficient to go in there and constantly go and see what you uploaded.
Yeah. Uncle Dan, can you
Hey, hey
can you do
guys.
it in 2.5 minutes?
Yes, I can. Yes, I can. I'm trying to pull up these scripts right now to put them into the chat. But secondly, I think you guys as a sales tool, there are other companies out there promoting this thing now. And when you're talking to your business owner, they don't know these other companies stuff, because Stefan deals with the IRS on a consistent basis, and he's always checking all this stuff, right? Where they're not. Most of their CPAs don't have a clue. They deal with them maybe once a year on an audit. I don't think you should mention anything about a lawsuit to your customer when it comes, that there's an additional year. I would say that without going into details. We may be able to get you 21, because I guarantee you the other companies are not even talking about
They
21.
don't know it. Yeah.
They don't have a
David,
clue.
nobody's even out there talking about this. Opens up ERTC, self-employed tax credit, opens up another year for FICA tips. Nobody's even talking about this yet.
Yeah. Yeah, that's important. I mean, that's that extra year is huge for the client and for all of us. I mean, that's just bonus money
Yeah,
all of
I
a sudden.
started looking at that yesterday going, let me think about what this opens back up. Wow, that opens up ERC, that opens up self-employment tax, that gives us another year. Wow.
Yeah. Yeah, that's nice. Okay. That everything, Dan?
That was
Uncle
it.
Dan?
I'm going to try to copy and paste and put this
All
in the
right.
script for the new
All right,
people.
let's go to the beautiful and talented Gina McWilliams before you have to go.
Well, we got 1 minute. The beautiful and talented Gina, talk fast.
Hi, I put in the chat for James my number since he's on my team. Reach out to
Oh.
me, James.
Yeah. He's shaking his head, so we're good.
Fantastic.
Thank you, Gina.
Hey, have a great weekend.
Yeah. Everybody, I apologize for having to cut this. I don't know if an hour is short, but I do have a Zoom I'm supposed to be on right now. So appreciate all your time, and I'll
Don't
get
forget
this.
to say when the next meeting is, and
I'll
that we're
get
going to get this one out.
Yeah, I'll get the recording to this to Stan later today, hopefully. And next Wednesday is the opportunity Zoom. Same link we used last Wednesday. Stan is emailing everybody that as well. So you'll have that, and we'll see you then. Thank you, guys.
Bye.
Thanks, Kurt. Thanks, everybody.
Thank you very much.
Yeah.